Ever since it burst onto the Canadian financial scene, Wealthsimple has been a bit of a disruptor. They promised a new way to invest, a more user-friendly platform, and all at a lower cost. But lately, there's been some chatter. Did Wealthsimple lose its edge? Did something go wrong? Let's dive into what's been happening with Wealthsimple and see if it's still the investing app for you. Early days, the fintech hero. Remember 2014? The financial world felt like a stuffy old library, and Wealthsimple waltzed in with a beanbag chair and a latte. Their sleek app, commission-free trading, and focus on millennials made them the cool kid on the block. They offered a simple way to invest your spare change, making them perfect for those just starting out. They quickly expanded their offerings, adding robo-advisors for automated investing and Wealthsimple Cash, a peer-to-peer payment app. It seemed Wealthsimple was becoming a one-stop shop for all things money, a way to save, invest, and manage your everyday finances, all from your phone. Growing pains, from fintech darling to complex corporation. Fast forward a few years, and Wealthsimple's gotten bigger. A lot bigger. They've expanded into the US, launched crypto trading, and even got the green light to hold your money directly with the Bank of Canada. But with all this growth comes complexity. Remember that simple app? It's become a feature-packed powerhouse, which can be overwhelming for new users. There have also been questions about fees. While still lower than traditional brokerages, some features within the app come with additional costs. Then there's the whole crypto thing. Wealthsimple was an early adopter in Canada, but crypto is a volatile market, and some users worry it doesn't fit with Wealthsimple's original focus on helping people invest for the long term. The big merger, streamlining or selling out. Earlier this year, Wealthsimple made a big move, merging their separate crypto and investing arms. This was presented as a way to streamline operations and offer a more unified experience. However, some see it as a sign that Wealthsimple is prioritizing growth over its core values of simplicity and affordability. So, what does this mean for you? Is Wealthsimple still a good option? It depends on your needs. If you're a new investor looking for a user-friendly platform to dip your toes into the market, Wealthsimple might still be a good fit. Their robo-advisor service can help you get started with a diversified portfolio, and the fractional shares feature lets you invest in expensive companies without needing a huge chunk of cash. However, if you're a seasoned investor looking for advanced tools and rock-bottom fees, there might be better options out there. And if crypto is your main game, there are dedicated crypto exchanges that might offer more features and flexibility. The final word. Wealthsimple's journey reflects the growing pains of a successful fintech company. They've offered a valuable service to many Canadians, but with growth comes complexity. Do your research, consider your investment goals, and don't be afraid to shop around before picking a platform. Wealthsimple may not be the only game in town anymore, but they're still a player worth watching. With that said, thanks for watching, and until next time.